Our first guest speaker is Richard Stewart, Chief Operating Officer at Sibanye-Stillwater, who has spent over 20 years working in South Africa's geological and mining industries. He has held various management roles and since joining Sibanye-Stillwater in 2014, has made his mark through his significant contribution to the company's successful growth strategy, rising to the position of COO in 2020. Having led Sibanye-Stillwater's initiative on platinum group metal development and drawing on his years of experience, Richard will consider how best the company can align its PGM supply to meet the needs of tomorrow's new emerging technologies.
Good afternoon, ladies and gentlemen. I'm very pleased today to be able to share with you some of the analysis we've done as a company on the historical PGM market and how we've used that to forecast what the future may look like, and how as both an industry and a company we have to strategically position ourselves to deliver on our vision of creating superior value for all of our stakeholders. As with any good information where you're forecasting 20 years out, it does require a safe harbor statement, and I'd urge you all to read this in your own time. I'm going to start off today with a comment that was made to me back in 2015 by Barry Davison, one of our directors at the time. Barry does have some history in PGMs, and this was at a point where as Sibanye Gold, we were busy planning our entry into the PGM markets. And the comment Barry made was, you need to understand with PGMs that it all starts and ends in the market. At the time, I have to admit, I did not fully appreciate the profoundness of the statement and the depth with which it meant. And Barry, if you are listening today, I apologize for being a slow learner, but I am slowly catching up. To kick off with, I'd like to go into three very simple facts about PGMs that significantly influence the market. The first one is PGMs are unique. They have unique chemical and physical properties, such as their biocompatibility, oxidation resistance, and fantastic conductivity and catalytic properties. And this means they can be used in a wide variety of uses. The second point is that PGMs can often be substituted by other PGMs to a greater or lesser extent, and sometimes with some efficiency losses. However, what this allows us the ability to do is ensure the alignment of demand needs with supply needs of different PGMs. The third point, which is probably the most obvious and important, but also the least appreciated, is the fact that PGMs are mined in a basket. We cannot selectively extract specific PGMs. And looking at the graphs on the right, what it shows us is that although different production districts have different mixes of metals, the global prill split, as we call it, or mix of metals, is fairly fixed. And it's fixed in a ratio of about 48% palladium, 47% platinum, and 5% rhodium. And changing that mix over a short period of time is very difficult. If we look back at the last 3 decades of the PGM market, a couple of points come to mind. The first one is we have seen spectacular growth from a market that was marginally more than 7 million ounces in 1990 to over 18 million ounces today. And that growth has largely been driven by autocatalysts. The second point we can observe is that from 1990 to 2005, the market share of platinum and palladium was largely in sync. However, since then, there's been a distinct disconnect, with palladium's market share growing at the expense of platinum. Now, anybody who fully appreciated the third fact I mentioned in the slide above about the prill split, this should be sending off alarm bells. Considering industrial demand, specifically of platinum, that has been steady over the last decade, and in fact can be very closely correlated to global GDP in any one year. The fourth aspect is jewelry. Jewelry grew quite significantly during the early 2000s and actually peaked in terms of demand in 2014, but since then we have seen a steady and constant decline, dropping down to a low of about 1.5 million ounces last year and 2 million ounces the year before. So given that the last 3 decades have been driven by autocatalyst demand, and given that the bulk of that supply has come from South Africa, how has the mix of metals in those autocats aligned with the mix of metals being produced in South Africa? And what we can see is from 1990 through to 2005, they were fairly well aligned. However, over the last decade or so, we've seen a disconnect, with palladium increasingly playing a role at the expense of platinum in the mix of those autocatalysts. Looking at what drove some of this is a price graph and a palladium to platinum ratio in autocatalysts overlain on that back to January 2000. And what we see is early this century, there was an attempt to substitute platinum by palladium, and that led to a spike in the palladium price, which then very quickly reversed that substitution. Since then, up until about January 2010, the overall ratio was fairly consistent between about 3 and 4 times platinum to palladium. Over that same period, costs of production in South Africa rose, platinum prices increased, and simultaneous to that, we had palladium that was largely being produced as a byproduct out of Russia, and therefore was fairly insensitive to prices in terms of the amount of production generated. This led to a surplus of palladium, depressed prices, and in 2020 we saw the commencement of substitution by platinum by palladium. That has largely progressed over the last decade. It was accelerated in 2015 with Dieselgate, where we've seen diesel market share decline, and in turn diesel autocats being platinum dominated has exacerbated the situation, where today we're looking at almost a full reversal, where the current ratio is about 2-to-1 palladium to platinum. What this has meant is a market that is fundamentally out of balance. So we have had sustained surpluses in platinum being produced, except for 2014 with the strikes in South Africa, and sustained palladium deficits, which up until a few years ago were largely fulfilled by excess surface stockpiles. The forecast I've included in this graph out to 2025 is in fact the forecast as it looked in 2018, and clearly it was not a sustainable solution. In April of 2019 at the Johannesburg PGM in Derby Day, we presented this exact slide, where we highlighted these concerns, indicating that unless we did something to balance the market and get the alignment between the supply basket and the demand basket back, we ran a real risk of demand destruction of palladium. At the time, we had engaged with many of our end users, and it became clear to us that the auto manufacturers and the OEMs thought in a very different time frame to what we did. This was quite understandable, given that at the time PGM costs remained a relatively small proportion of the total cost of production for the OEMs, as well as the fact that they were dealing with the reputational fallout of Dieselgate. And frankly speaking, back then, the risk of changing autocatalyst technology was simply greater than the cost of maintaining the status quo, despite the fact of the continued increasing gap between the palladium and the platinum price. Conventional wisdom at the time was that once that price gap got to a critical point, OEMs would drive substitution. But the concern we had at the time was, what if it wasn't a price issue, but if we didn't address this quickly enough, could become a physical security of supply issue. And that to us could lead to a permanent shift in the PGM demand and market dynamics. We presented several solutions that could potentially be looked at to balance the baskets, but at the end of the day, our conclusion was that the biggest lever we had to pull was the substitution of palladium by platinum in gasoline autocats. So it was during 2018 to 2020 where, together with Impala Platinum, we funded research undertaken by BASF to optimize the trimetal catalyst. And simply put, what that meant was substituting palladium with platinum in gasoline autocats. The rationale behind undertaking this research was that we were providing a solution for our end customers to a problem that they had not yet recognized they had, and therefore giving them a ready solution before they even know they needed it. This is truly creating values for all stakeholders in the supply chain. Looking at the graph on our right, this is our internal forecast of what the impact of substitution may mean for the market, but it is broadly in line with most forecasts from most research houses and analysts today that we could see an impact of about 1.5 to 1.7 million ounces of palladium being substituted by platinum 5 years out. This in turn has provided a solution to bring our market back into balance. And certainly by 2025, we believe we have the technology to do that. So what has this history taught us? Well, the first thing is exhaust emission control is not new. It was first introduced and discussed as early as the 1950s in selected cities where air pollution was a real issue, particularly California, We saw that spreading in the late 50s and early 60s to selected European cities. And in parallel with that, there was a lot of research going on in terms of the development of PGM autocatalysts. But it really wasn't until the 1990s that this truly took off. And when you look at the history, it was a coalescence of two events that resulted in this. The first was the advent of the trimetal catalyst, where breakthroughs in technology had a real impact on emission control that made a measurable difference. This was combined by political will to influence and implement regional regulatory frameworks, largely driven by the recognition of the negative impact of greenhouse gases on the atmosphere, and in particular carbon dioxide. The coalescence of these two events fundamentally underpinned what has driven our industry for the last 3 decades. During that period, we've seen substitution occur, largely driven by price elasticity. We've also noted, as indicated earlier, that industrial PGM applications, because of the unique qualities of PGMs, are largely price inelastic with very few substitutes. Jewelry demand, on the other hand, is quite unique to the other uses of PGMs, and that is because jewelry demand is still driven by consumer preference, not necessarily by the unique qualities of platinum. This means that jewelry remains vulnerable to a myriad of external macroeconomic forces, much like other consumer goods. And despite it having played a critical role in the platinum market in the 2000s, acting as a shock absorber due to its price elasticity, certainly there has been a structural disconnect over the last few years. So ultimately, putting all of this together, what we have learned is that demand is both created and managed by a combination of external market forces, the progress of technology, and ultimately smart market development. What does this mean for us going forward? Well, the first thing is we face an immediate challenge, and that's rhodium. This shouldn't come as a surprise to many people. I can recall at the beginning of last year, at probably the last conference I attended in person at the Mining Indaba in Cape Town, an analyst asked Matthias Dorn from BASF if he had a choice of investing in platinum or palladium, where would he put his money? And Matthias's response was, I'd invest in rhodium. And this is the reason why. We once again are forecasting sustained deficits in rhodium, driven largely by regulatory frameworks. There is a solution to this. We certainly believe that solution again is substitution, potentially of palladium by rhodium. And this is an area where, as a company, we are investing funds to solve this for the benefit of the full supply chain. If we take a view over the next 2 decades, we split this broadly into 2. We remain very confident that the next decade will still be underpinned by autocatalysts. We still see ICE, internal combustion engines, growing at a rate of 1% per annum. And that is largely including the fact that many of the electric vehicles will be hybrid vehicles, still requiring PGM autocatalysts. This is despite an aggressive forecast of between 18 and 20% compound annual growth rate for battery electric vehicles. Another market we've looked at closely, and I dare say optimizing that supply chain at these growth rates has its challenges. In addition to the fact that ICEs will be growing, there are also going to be increased PGM loadings driven by increasingly stringent regulatory frameworks. So for the next decade, autocats will still underpin our business. Thereafter, the hydrogen economy starts playing an increasingly important role. And that also represents a very important transition from talking about 3 PGEs, platinum, palladium, and rhodium, to 5 PGEs, including iridium and ruthenium. How we have used this in terms of our own strategy? Well, we entered the PGM market through a series of acquisitions. The first 2 were in South Africa, Aquarius Platinum in March 2016 and Rustenburg Mines in November 2016. And what those 2 acquisitions did was give us significant operational scale, but with specific exposure to ore bodies that are rich in the so-called minor metals of rhodium, ruthenium, and iridium. Our third acquisition of Stillwater was very strategic. Stillwater gave us 3 things. The first one was geographical diversification into the US. And geographical diversification is a very difficult thing to achieve in PGMs, given the concentration of where production is derived. The second thing it gave us was a palladium-rich ore body. Stillwater is in fact the largest primary producer of palladium in the world, And the third aspect was recycling. And although we haven't gone into recycling in a lot of detail today, I think worth noting that if you are going to be in the production of metals for a green economy going forward, recycling and the understanding of closed-loop markets is going to be critical in that arena. An analysis we've done on the over 800,000 ounces we produce through recycling is that those ounces compared to hard rock mining emit 6 times less tons of CO2, utilizes more than 60 times less water, and generates more than 90 times less physical waste. The final aspect of our growth trajectory was the acquisition of Lonmin in 2019. And again, Lonmin gave us a significant resource potential, one we look forward to sharing with the market in the months and weeks to come, again around the minor metals in particular, but also gave us PGM refining capacity that completed our mine to market strategy. What this series of acquisitions has meant is that Sibanye-Stillwater has a fairly unique prill split, group production prill split, on the basis of the geographical diversification and ore body diversification we have achieved. While it is still today not perfectly aligned with the global PGM demand basket, it certainly is a lot closer than many of our peers, and again, major producers in the so-called minor metals, and minor being iridium, that is trading at prices of more than double palladium, and rhodium, of course, trading at all times highs, almost 10 times that of palladium. What it means for the future is that by 2025, we see our production ratio being very much in line with what the world is going to want, i.e. we can supply the world the metals they want in the ratios that they're going to want it. We also have ensured that we have a significant market share of the metals that are going to underpin future demand around the hydrogen economy. So in conclusion, what we can take out of this is that PGMs are unique, and this very fact means that demand is significantly influenced by both external environment changes, but also the advances in certain technologies. I dare say that I believe we are sitting in a position today very similar to where the PGM market sat in the 1990s, where they were on the cusp of a significant structural change that drove huge growth. Similar to the 1990s, we have spent the last few years, last decades, researching technologies for the hydrogen economy, and similar to the 1990s, we are now in a position where the political will to implement new clean energy is being driven as a key global agenda, and we have the opportunity to match that technology and ensure the sustainability of our industry. Something we must learn from the past was that we allowed the PGM demand mix to get out of kilter with supply, and this was to the detriment not only of our end users, but also to ourselves. It led to sustained deficits and surpluses in certain metals, which drove volatile prices, making planning difficult for us as an industry. Going forward, the supply chain has to work together to ensure that the investments we make today will deliver technologies that we can securely supply into and provide that security to our end users for the foreseeable future. As a supplier of PGMs, we have taken out of this 2 critical strategic pillars, which I think you ignore at your peril. The first one is, we do not only have the ability, but in fact the responsibility to influence future demand trends. And also as a supplier, you ideally want to set yourself up such that you can supply optimal metal mixes for the future needs of the country and the globe. Sibanye-Stillwater has achieved this through fostering strategic relationships with the entire supply chain, including end users, fabricators, catalyst manufacturers, and chemical companies. We have also, through our acquisition and entry into the PGM markets, built and developed a unique portfolio that can provide the metals that are going to be demanded, not only today, but also tomorrow and for the following decade. Thank you very much.
Thank you very much, Richard. Excellent presentation. So if I could kick off, Richard, some end users are pretty apprehensive about the prices, particularly in the minor metals, and of interest is iridium, where so many people are looking for significant growth in electrolyzers to manufacture green hydrogen. How does Sibanye give confidence to these end users who are adopting iridium as for proton exchange membranes in electrolyzers?
Stephen, good afternoon, and perhaps if I can just firstly greet everybody else on the call, and I hope and trust you can hear me clearly. Great.
Yes, absolutely.
Super. Yeah, listen, I think a very good question, Stephen, and really important at this point is perhaps to distinguish between prices that get driven by short-term volatility, supply crunches, and really look at the longer-term strategic view. I think that's precisely what we're saying in terms of our presentation, is that people, for example, that are going to be manufacturing electrolyzers in the long term, we really need to work together with them to co-develop that technology and understand the needs and requirements, and in that way ensure that we have the ability to supply those metals. In the longer term, prices will ultimately be driven by total supply and demand needs. That'll be influenced by the cost of production and obviously the benefit of the final products that are being produced. But if we can align those supply and demand needs, at least they are assured of security of supply, and they in turn can manage their own forecasts better.
Okay, Beresford, yeah.
Yeah, we've got sort of two questions actually, which I can combine into one, I think, which would be good, from different parts of the planet. So first of all, you highlighted recycling as having these kind of green credentials relative to primary mining. So would Stillwater see PGM refining in North America as a potential next strategic step as part of the Sibanye Group? So that's one part of the question. And the other part of the question, which is quite interesting, is would you expect the growing appreciation by consumers of greener PGMs from recycling to PGMs from primary supply? And therefore, what extent can the market offer a premium for PGMs from secondary supply compared to primary supply? So quite an interesting sidewinder there.
No, thanks, Beresford. Listen, and I think a very appropriate question here. I think there's no doubt that the importance of recycling in terms of, let's call it the green economy, is going to continue to grow. As I mentioned, I think from a purely green perspective, when you look at emissions and waste that gets generated, recycling is far more preferable to hard rock mining. Of course, it's critical to remember, especially when looking over a long period of time, you can only recycle metals that have in fact been mined. So I think the primary supply will always be critical. And recycling, there's a natural lag to it. Where I would say recycling is also going to become increasingly important, though, is when we do look at the minor metals, which are small markets. To the earlier question, Stephen, markets like iridium, primary supply today is only about 270,000 ounces. That's a tiny market relative to most metals. And if we're going to be able to produce steady supply for what the market's demanding, closed loop markets and recycling of those metals is going to be a critical part of securing the overall balance. In terms of potentially attracting premiums through those metals, listen, I certainly do think that is an opportunity. It's not one that is being specifically supplied at the moment. I think, as we are aware, the entire supply chain is very sensitive towards ultimate emissions and reaching carbon neutrality in the future. And certainly those metals play a critical role in terms of doing that. So certainly very strategic.
Thank you, Richard. That's a really very, very good answer. But I've got another little sidewinder here for you. It's electricity supplies in South Africa are a major concern. People understand around the world, and obviously for the industry and how it's impacting. What are your thoughts on that? Where are we now? I know that the government has put Eskom at the forefront of its agenda to fix the problem of underinvestment, etc. But what are your thoughts, and how will potentially the utility of electricity impact production going forward?
Yeah, and Stephen, I think we've always spoken about electricity supply as being a risk. And that discussion goes back to, in South Africa, probably back to 2007 when we experienced the first rolling blackouts. It's been on everybody's risk register since then, and remains there today. I dare say that there's another risk with the electricity supply in South Africa that's now becoming more and more prominent, and that is the fact that we are almost entirely a coal-based. Eskom is a coal-based electricity supplier. So So again, from a green perspective, and certainly trying to align these metals to what the world is looking for, that also becomes an increasing risk. So I do think that South Africa's challenges in terms of supplies, I think certainly electricity is going to constrain a lot of new project developments. When you do look at any new projects that come online, trying to balance, what's required from an electricity perspective, and especially when you look at processing expansion that may be required, that is a real challenge. I think the solution is ultimately going to come from renewable energies, and we'll have to supplement the grid with renewable energies, both from a supply and from a green perspective. But as we know, again, that is not something that is achieved overnight. I think there's a lot of focus going into this area, and that for me is the solution, but it's not going to be an overnight one, unfortunately, and will require a lot more alignment and engagement between ourselves as an industry and the regulators. And that arguably has to be first on the agenda, but one of the biggest challenges we face today.
Okay, thank you.
Another one, Richard, which is kind of combining two questions again, so we're really working our way through the questions. A lot are coming in. For the catalyst technologies that you highlighted in your presentation, which have been developed by BASF and sponsored by yourselves and Impala, are you seeing the uptake of palladium substitution for platinum among the auto companies themselves? And is this a kind of universal global thing, or is it very much regional? And then the second part, which I'll bolt on to this question, is you also mentioned the substitution of rhodium. So maybe on the basis of how quickly it's taken to substitute out palladium, how quickly, bearing in mind the rhodium prices that we've got now, how quickly do you think it'll take to substitute rhodium?
Yeah, quite a few questions in there, Beres, but let me attempt to cover most of them out. So I mean, in terms of the question around regions, listen, there is a difference, but I suppose driven by two things. The one is obviously the tightness of the regulatory regime you're operating within, and how easy it is to get a new catalyst registered within a region. So essentially, once a catalyst has been designed, it has to go through a process of confirming that it can deliver what it says it can, and only then does it actually get implemented into new production lines. So of course, that process is different across different regions and does drive the speed of uptake. I think the other key factor that drives the speed of uptake is the cars that it's applicable to. So obviously, the tri-metal catalyst is easier brought into a certain set of cars rather than big high CC engines. So yes, there is a regional demand. I think as part of the development that was undertaken, though, together with BASF, clearly as a supplier into these markets, there was early alignment with certain companies to implement this technology and really get it rolled out sooner rather than later. So there was very much an integral part of both the implementation of the technology and the development at the same time. I think it was being co-developed in other parts of the world. The importance with this is because of that timeline, and perhaps let me use this to comment on the rhodium question as well. We recognize that it would take a couple of years of research and testing before it could be rolled out. And that was really the driver behind kicking off that research, so that by the time industry recognized that they needed it, we would already be a long way down the road to be able to solving that solution. In terms of, obviously, this is R&D work, so quite difficult to put an exact timeline on these. It took us a good sort of two years worth of research on the tri-metal catalyst, and that's probably the best benchmark I could use in terms of the rhodium catalyst. But with the big qualifier, this is research. It's not just a straight process that gets followed steps 1 through to 5.
Brilliant, thanks, Richard. And I guess almost like trying to find the vaccine for COVID. I imagine $30,000 rhodium is going to concentrate the minds there.
Absolutely, and I think that is where we as an industry have an opportunity to play a critical role, because we do foresee what's coming. We work very closely with the supply chain in terms of the fabricators who really are the guys behind the scenes who come up with these technologies, and that's why I say it really is our responsibility to work more closely with them to solve these solutions before they become a real issue.
Good, thanks.
Okay, well, thank you. Richard, I've got one more question here on the basic supply-demand scenario. This one's from London. substitution of platinum with palladium makes sense, and has done. But in the next 10 years, there's going to be a lot of palladium coming back from recycling. Have you extrapolated and included these in your numbers going forward?
Absolutely, Stephen. And again, I think there are two parts to that. So, you can confidently, I guess, or with a level of confidence, forecasting always has its risks, I think, as you highlighted in your talk, Beresford. But, over the next 5 years, we can certainly have a fair amount of confidence. And I guess critically important there, that substitution of platinum into palladium is filling a gap that didn't exist. So there was going to be a real shortage of palladium. I think beyond that, what is critically important to realize is that the substitution has gone one way now. That doesn't necessarily mean that it cannot go the other way again in the future. And I think that's exactly what we're saying is, what we really need to do is to be taking 5 to 10 year views and understanding how we get the mix of all of these metals right to balance the total basket. So there could be excess palladium. If we do end up solving palladium substitution for rhodium, that will certainly take up a lot of that excess metal that comes onto the market. So this really is a question about constantly developing technology to maintain that balance. And sadly, that's what we've got wrong over the last 15 years. We've let it get out of kilter, and that's led to more of a reactionary response today as opposed to a proactive one.
Thank you, Richard. Now it's been raining in Oxford most of the day. And it would have been a really great evening, and if you could have joined us for the pub crawl, because it would have kept us in the pub for longer. Although the walks around Oxford are fantastic. Richard, thank you ever so much for all the time. I know that it's been a very, very busy time for you, and we're ever appreciative of the effort that you've made for all the videoing and putting the presentation together, etc. So thank you very much indeed for that.
Thank you for the opportunity, Stephen, and we'll definitely take a rain check on that pub crawl.
Yes, and could I hand over back to, and thank you, Beresford, for joining me. Could I hand over back to Green TV technical support? Thank you.